Welcome back, everybody. My name's Nicholas, and this is Investing Against the Grain. Very exciting weekend for us over here. We hit our goal of 50 subscribers by the end of July. We hit this goal 20 days ahead of schedule. This is amazing. We did not expect this to happen so fast. So because of that, we want to go ahead and raise the bar and attempt to hit 75 subscribers by the end of July. This is an ambitious goal, but I think we can do it. I also want to give a special shout out to Santiago Morris. For those of you who don't know, I'm a software systems engineer. I design data centers, and Santiago happens to be my mentee. So I want to thank him for helping put us over the top and hitting our goal by the end of July. Now, let me go ahead and talk about what today's video is about. We're going to go over why and how Tesla can get to $3,700 a share by 2023. We'll go over the bull case, a bear case, and an intermediate case. So before we get into it, please, if you enjoy this type of content, hit the like button, hit the subscribe button, and let's get into it. Okay, so we're going to start off with my bull case scenario for 2023, and that's what the chart we're looking at right now. So I'll give you a little bit of context before we get into this. If we look down here, you can see that my premise is that we hit 960,000 vehicles produced by Tesla in the year 2021. So this essentially is, I think, a very optimistic case. Right now, we hit 204,000 roughly for Q2. So in order to hit this number, not only would we have to ramp up a little bit above 250,000 for the next 2 quarters, but we'd also probably have to, at least from the Shanghai and Fremont factories, we'd also have to get some production from Berlin or Texas. So this is fairly optimistic, but you know, it is definitely within the realm of possibility. We also assume moving forward that there's 62% growth year over year for the next 2 years. This, I think, is not really that optimistic. I think this is very feasible. I'd be very surprised if we don't hit well over 62% this year alone. So those are just, you know, a little bit of context before we get into it. I'll go over the PE ratios we chose and the why behind it, but let's go ahead and take a look at some of these numbers. So this assumes 2023 and where we stand by then and the number of vehicles produced. So if we extrapolate out 62% growth year over year up to 2023, we get a total of about 2,500,000 vehicles. Okay, so this would be a aggregate between Fremont, Shanghai, Berlin, and Austin. Now these are the numbers that this breaks down to. So for Model 3, about 900,000 vehicles for the year. Model Y, about 1.3 million. For Model S and Model X, roughly 60,000 for each of those. Cybertruck, coming out of Austin, it'd be about 50,000 vehicles. The Semi, which is also being built out of Austin, would be about 25,000, so a little bit on the lower side. Roadster, again, nothing too significant, 1,000 vehicles from there. And then the Model 2, or the compact vehicle, essentially Tesla's next vehicle, right? A smaller vehicle that's more cost effective. We assume 150,000 made. Now again, this is the bull case. Tesla has, and Elon has spoken about this, next vehicle. They, haven't actually shown us anything, but, we assume that it will be out by 2023. So if you aggregate all of these vehicles, we come out to the 2.5 million vehicle number. Now over here on the right, we can see the average selling price for all these vehicles. This actually, from my perspective, is fairly conservative. You can see here, I have the average selling price of a Model 3 at 45,000, Model Y is 60,000. I don't think this is really that optimistic. I actually think this is fairly conservative. For Model S, 95,000. Again, a lot of the plaids are, in the, 120 number, and I'm choosing to go with 95 for the base average selling price. Model X, 100,000. Cybertruck, 65,000. This might be a little optimistic, but again, I don't really think so. Just because the starting price is, around the 40 to 50,000. I do think by the time all is said and done and people purchase their vehicles, any upgrades or anything, it will be at about 65,000. Semi, 160. Roadster 225, and the Model 2 Compact 25,000. This, again, I think this is what they're trying to get to, is a $20,000, $25,000 vehicle. If you take in the tax credits that might come from Biden, that's about $10,000 total for that you would get towards your Tesla vehicle purchase. That brings this down to about $15,000 for a Tesla. So I think this is extremely realistic as far as average selling price. Now, if we look to the next column, here we have revenue. The revenue is, very basic math, total amount of units sold times the average selling price. Now, from there, we're going to go ahead and have a gross margin. I assume a 25% gross margin. This may be not that optimistic, to be honest. Right now, we're looking at about a 22-23% gross margin from Tesla. A lot of that does have to do with the fact that these vehicles are being made half of these vehicles are being made in Shanghai as of 2021. But with Berlin coming online, with Austin coming online, I think things are going to get a lot more efficient and the gross margins are going to be a lot higher. So in this final column here, we have the total gross profits. And again, this is just for Tesla Motors, okay? So I broke this out between Tesla Motors and Tesla Energy. If we scroll down here and we look at Tesla Energy, we can see that we have all of the different line items for Tesla Energy: Megapack, Powerwall, solar panels, solar roof over here on the left. Now, keep in mind, the Powerwalls are now sold with the solar panels and or solar roof. So you can't buy the Powerwall alone anymore. So what I did was I essentially just took the total sum of solar panels and solar roof, and then I just doubled it because on average, it seems like everybody is being suggested to have two Powerwalls. So, again, none of this is an exact science. These are just very rough kind of back of the napkin math, but I think this is fairly conservative. So these numbers are the total units in correlation to the different products that Tesla Energy offers. Over here, we can see average selling price. Again, as far as the solar roof and solar panels, I took my own house and I plugged it into the Tesla Energy calculator to figure out what mine would cost. And so I think these are actually fairly conservative numbers. And then for the Powerwall, this is pretty much based off today's prices. So, this could actually, go up a lot more or down a lot more. Who knows, right? Based on cost of material and supply and demand. But I think for this exercise, these numbers are very solid. If we talk about gross margins, I assumed 5% for the solar panels and solar roofs. And then I assumed a higher percentage for the Megapack. I assumed about a 30% for the Megapack. And then over here, we can see all of the gross profit. Now, if we take the gross profit from Tesla Motors and we take the gross profit from Tesla Energy, you can see what we get total here, right? So this is about 53 billion in gross profit. Now, for expenses, I went ahead and deducted 25%, for, any expenses they have beyond, your normal, kind of, expenses for making the vehicles, right? So, think R&D, think, different investments that they might be doing. I just took 25% off. I think this is a fairly safe assumption. It could be higher, it could be lower, but I had to pick something, so I just went with that. But this gives us the total net profit of, just shy of 40 billion. Now, again, keep in mind, this is the bull case for 2023. This is a more optimistic viewpoint, but I went with a market cap PE of 90. Now, this may seem high, but let me put it into perspective. Tesla is growing at over 50% annually right now. Okay, that is massive, massive growth. If we look over here, we can see Amazon has a PE of 71. Amazon's not growing anywhere near as fast as Tesla right now, right? Amazon's a fairly fully baked company. Apple is even more baked, right? They're definitely not what we call traditional growth company. I mean, they pay dividend now, right? That normally you don't see growth companies paying dividends. and they have a PE of 32. So I think 90 for Tesla is really not that optimistic. I think that's fairly conservative. It is bullish, but I still think it's fairly conservative, especially if we compare it to the likes of Amazon and Apple. So with that said, you can see what the total market capitalization comes out to. It's about a $3.5 trillion market. Now, if we take that, we divide it by the total number of shares outstanding for Tesla currently, we get a price target of $3,735 per share. Okay, that's $3,700 per share in 2023. If we compare that to where we are right now, that is a 5.7 times growth. Okay, that is huge growth potential in just a couple of years. Okay, if you think about that right now, if I told you that you could buy Tesla right now and that it would grow 5.7 times by 2023, how much would you pay for that right now? Probably a lot more than $655, which is the current trading price. You'd probably pay easily $2,000 a share to get that kind of growth, right? If I told you $2,000 and it'll grow, up to $3,700, that'd be a steal. Anyone would do that. But again, this is my bull scenario, but keep in mind, there's a lot of conservative, numbers in here. I'm very conservative when it comes to the PE, in my opinion. I'm very conservative with the average selling price, which we see over here. And I'm also very conservative, I think, based on, some of the gross margins. And keep in mind, none of this assumes anything to do with full self-driving, with robo-taxis, none of that, okay? So this is the bull scenario for 2023, $3,700. Now, let's go ahead and take a look at our bear thesis for 2023, which is still going to be very incredible returns. This is my bear case chart. So again, let me kick this off by giving some of my premises that I'm assuming when we're looking at this chart. If we look down here, first of all, I'm assuming 50% growth based on Q2 numbers. So in Q2, we hit about 204,000 vehicles. And all I did here was extrapolate that for all of 2021 on a very conservative basis. So this assumes that we only hit 800,000 vehicles in 2021. And then from there, we grow at a 50% clip year over year until 2023. So let's go ahead and get into that. So based on that, we reach 1.8 million vehicles in 2023, right? That's what we're producing annually. And the breakdown for that is 700,000 for the Model 3, which, I think between, again, Fremont, Shanghai, Berlin, and Austin, I think, this is a very feasible number. Model Y, exceeding Model 3. Elon has said many times that Model Y will be their best-selling vehicle. I don't think this is a surprise, hitting 900,000 here. Model S and X, 50,000 each. I would actually say that this is extremely conservative. But again, 100,000 for those, about 25,000 a piece for the half year. I think that's a very solid number, and I think it's very feasible. And again, I think this is probably way too conservative. Cybertruck hitting 50,000 a year as well. Again, this will definitely be a lot higher, I think, especially since it'll be made with the GigaPress. This will definitely by 2023 be exceeding 50,000. But again, this is the bear case, so I really want to undercut everything. The Semi, we keep that at 25,000. I don't think that that's going to be something that really impacts this price target, this spreadsheet we're doing here. It's only 25,000. It really doesn't move the needle. Roadster, same thing. We keep that at 1,000. It's just not that substantial to really affect anything. Now, the Model 2, the compact, again, Tesla's next vehicle, we assume it's only at 25,000 vehicles produced. This, I think, is also, again, very conservative. What I anticipate is in 2022, they'll announce this vehicle, and then it'll start to be produced probably in China first. And again, 25,000 over the course of all of 2023, that's if for their most cost-effective vehicle, that's beyond conservative. But again, the whole idea is to say worst case scenario. Right? Things are not going as smoothly as we anticipated for Tesla. Obviously, they're still growing, but everything's kind of being slowed down, and not as speedy as we would like. And anyways, that comes out to 1.8 million vehicles. Over here for the average selling price, what I did was I went onto the Tesla website and I found the cheapest price for any of the vehicles. In other words, assuming nobody upgrades anything. They take the free paint color, they take the standard wheels, there's no full self-driving. I took the cheapest possible version you could buy of the vehicle, and that's what I did for the 3, Y, S, and X. Okay, so this average selling price is clearly skewed to the low side, right? It's definitely gonna be higher than this, but again, we want to have the worst possible case scenario here. For the Cybertruck, same thing, semi, roadster, and then the Model 2 compact, we left that at $25,000. Again, optimistically, I would say it could even sell for less, but let's leave it at $25,000 for now. Now, here we can see the revenue. Again, same as the last chart, right? This is just a simple math problem of units multiplied by average selling price. And then here on the bull case, I assumed a 25% gross margin. Okay, right now in 2021, without the S and X, which are the more profitable vehicles, right, have higher gross margins, we're sitting at about 22-23%. In this bear case, I say it comes down to 20%, right? So going the wrong way, which is highly unlikely. But again, this is the bear case. So let's say 20% gross margin. And that's what we result here. And again, for the gross profit, we can see it's just what we have from gross margins multiplied by total units. And this brings us out to a total of $17 billion in annual revenue. Now, moving on to Tesla Energy, right? We went through the same exercise. So Megapack, we assume only 50,000 units. Powerwall, only 300,000. And again, the Powerwall, I just took the solar roof and solar panels assumptions, and I doubled it because I'm assuming that with every solar roof, every solar panel sold, that they're going to sell 2 Powerwalls to go along with it. And then here we can see the average selling prices. I kept the gross margins the same because I just don't think this is gonna move that much or bend the needle. And then we can see that the total gross profit of Tesla Energy comes out to about just under 15 billion. So if we aggregate Tesla Motor and Tesla Energy, we get a total of about just shy of $32 billion in total gross profit. Now, we assume, again, expenses of about 25%. So we go ahead and discount that from the total gross profit for a total net profit of just under $24 billion for the year of 2023. Now, for market cap, we went ahead and we assumed a PE of 50. Okay, keep in mind, even at this point, at 50% growth rate, Tesla is growing by far more than what Amazon is currently. Amazon sits at a PE of 71. Apple's at 32. We chose to go with a PE of 50, okay, for our most bear case scenario. That brings us out to a total market cap of just over $1 trillion. Well, clearly someone just walked in front of my house. My Ring doorbell just went off. Apologies for that. But anyways, so this comes out to about $1.2 trillion market cap. And that equates to a share price of about $1,200. So keep in mind, it's 2021. We're halfway through 2021. We're sitting at a stock price of $655 per share. This would effectively be a 1.88 times return on your investment. Okay, again, to have almost a doubling of your investment in a matter of a year and a half, that's wild. Okay, that is serious growth in such a short amount of time. And this is my bear case. And keep in mind, no robotaxi, no FSD, right? Nothing, no Tesla insurance. None of that is assumed here. This is just simply back of the napkin math of Tesla Motors and Tesla Energy on a extremely conservative perspective, right? The lowest possible average selling price, gross margins that are actually going backwards compared to what they are currently today. So this is such an unlikely scenario. This is so conservative that it's not even realistic. But even in that point, we are sitting here at almost 2 times return by 2023. Okay, so now that we've gone over the bull case and we've gone over the bear case, why don't we kind of blend those for an intermediate case that will probably be the more likely scenario that we see. So let's go ahead and take a look at that. Now that we're looking at the moderate case for 2023, again, just like we've done with the last 2 charts, let's go ahead and go over my assumptions. So in this case, my assumption is that in 2021, we only make 850,000 vehicles. This, I think, is extremely realistic, if not even a little conservative. And we also assume a 60% year-over-year growth. Again, I think this is extremely conservative and, fairly realistic. We will exceed 60% this year of growth. And again, Elon has mentioned over and over that he thinks that Tesla for the foreseeable future will do at least 50% year-over-year growth. So as far as the PE ratio, we'll go over that, when we get to the market cap. So when we look at this 850,000 and we compound the 60% growth all the way through 2023, we get about 2.2 million vehicles. And the breakup of that is, again, Model Y far exceeds Model 3 with 1.2 million to 750,000. Model S, Model X, we hit about 60,000 of each of those. Cybertruck, we hit 50,000. And again, this essentially parallels, a very conservative case. Semi-truck and Roadster, we don't really change that too much because, again, those are in such small volume that they're not really moving the needle. And then in this case, for, to be conservative, we assume 50,000 vehicles of their next generation, more compact, more cost-effective vehicle. As far as the average selling price, all I really did for these was take my ultra conservative price and then just bump it up by a few grand, assuming, hey, maybe someone just gets an upgrade for the rims, or maybe they just get a upgraded paint color, or maybe they get, the extra seating for the Model Y. I didn't want to really, break this out too much. I mean, you can even see here for the Model X, I still have it at 100,000 and the Model S at 90,000. So, these really didn't fluctuate that much. What really fluctuated in all of this is the amount of vehicles produced. So all of these average selling prices are still very conservative. Now for gross margin, I bumped it back up to 25%. And the reason for that, again, is because if in 2021, we're looking at 22, 23% gross margin, it's really hard for me to believe that with Berlin opening, with Austin opening, them transition to the GigaPress, that they're not going to be a lot more efficient and have higher gross margins. I mean, even just in 2021, without the Model S, Model X, which are their highest gross margin vehicles, we're already seeing gross margins go up with just the 3 and Y out of Fremont and Shanghai. And keep in mind, Fremont, it's very expensive to make vehicles there. Shanghai, extremely cost effective. And then Berlin and Austin, they'll be even more efficient just with their manufacturing and their process. So that all has to be accounted for. And 25%, this, people like Kathy Wood can see this going up to like 40%. So you can only imagine what that does to these numbers. Okay, so that leaves us with a total gross profit of about 26, almost $27 billion in just Tesla Motors. We look at Tesla Energy. This, I keep Megapack at 50,000, Powerwall 300,000. I really don't mess with Tesla Energy. I think Tesla Energy is going to consistently lag behind Tesla Motors for the next 5 years. But according to Elon, he does think that eventually Tesla Energy can far exceed, or at minimum, be producing the same amount of revenue as Tesla Motors. But again, for the next 5 years, I really see Tesla Energy lagging a little bit. So in this moderate assumption, I assume all the numbers from the bear case effectively stay the same all across the board. And that gives us about just shy of $15 billion in gross profit. So we take the gross profit from Tesla Energy and Tesla Motors, and we get a gross profit of about $41 billion. Again, expenses, we keep it at 25%, and that leaves us with a net profit of $31 billion in 2023. Now, for the PE ratio, we had 90 for our bull case. We had 50 for our bear case. For our intermediate case, we're going to apply a 70 PE, which is the same as what Amazon has currently today. Amazon has 71, and we're assuming that Tesla will have the same PE ratio as Amazon, even though Tesla at this point would be growing at a far greater clip than what we see Amazon growing. Now, that leaves us with a just over $2 trillion market cap at this point and a share price of $2,257 per share. That is a 3.4 times growth from 2021 to 2023. That is massive exponential growth in such a short time. Okay, so this is my intermediate assessment thesis for Tesla by 2023. Now, keep in mind, what we just went over is a potential to go from $1,200 all the way to $3,700 per share in a matter of a couple years. This, even the worst case scenario, even if I'm wrong completely on the intermediate or the bull case, even the bear case is almost a doubling of your return in a matter of a couple years. It takes the S&P 500 about 7 years before it doubles your money. And we're talking about doing it in about 2 years. Okay, this is the power of exponential growth. This is why Tesla is such an underrated investment right now, because people don't understand the growth. People like to think in a linear fashion versus an exponential, right? Our human brains really struggle to understand exponential growth. Apparently, my house is popular with everybody walking by today. Sorry about that. I should really be sponsored by Ring at this point. Anyways, so we're going to leave it there for today. I hope you guys enjoyed this video. I hope you think that, what we went over here was, very realistic as far as what's being produced. Again, even in the most optimistic case, it's actually fairly conservative without having any robo-taxi or any FSD in here, any Tesla insurance, right? We're just doing back of the napkin math, and these are the numbers we get. All right, if you enjoy this type of content, please help us out by hitting the like and hitting the subscribe button, right? We're here for you guys. We want to get as much content out as we can to inform the public about Tesla and about investing in companies that generate exponential growth. That's what this channel is about. Okay, well, have a good day, everybody. I hope you enjoy the rest of your weekend. I'll catch you later.